Will the Chinese and Iranian alliance harm the American economy? Petrodollar. This will be the main focus of the video today. In recent months, China's purchases of Iranian oil have increased to record levels, surpassing a high point in 2017, when the trade was unrestricted by U.S. sanctions. The world's largest oil importer increased its purchases, according to tanker monitoring data, while negotiations to resurrect the 2015 nuclear agreement, which will relieve U.S. sanctions on Iranian oil exports, were taking place between Tehran and major international powers. Recently, the discussions have become more intense. Returning Iranian oil will help the world supply become less constrained and lower petroleum prices, which have reached $100 per barrel as a result of Russia's invasion of Ukraine. According to estimates from 3 tanker trackers, Chinese imports hit 700,000 barrels per day BP'd in January, exceeding the 623,000 BPD peak reported by Chinese customs in 2017 before former U.S. President Donald Trump reimposed sanctions on Iranian oil shipments in 2018. One tracker calculated that imports averaged 780,000 BP in November and December. The administration of U.S. President Joe Biden has so far decided not to put the penalties against Chinese people and businesses into effect. Chinese purchases of Iranian oil would imply less supply would be available to Tehran's prior customers, such Indian and European refiners, should the sanctions be lifted and the Islamic Republic be permitted to restart oil exports, while talks to revive the 2015 agreement continue. When prompted for comment by readers, traders said it would also imply that cheaper Iranian oil would continue to displace competitor supply from Brazil and West Africa. Beijing opposes Washington's long-arm authority and requests the removal of unilateral sanctions, but the Chinese Foreign Ministry refuses to provide further specifics. A request for comment was not answered by the Iranian Oil Ministry. According to a representative for the U.S. State Department, Washington is aware of China's imports of Iranian oil and has brought up the issue with Beijing. The spokesperson referred to the 2015 nuclear agreement, formerly known as the Joint Comprehensive Plan of Action, saying China is an important trading partner for Iran. So, of course, our discussion with China on how best to get a mutual return to compliance with the JCPOA include discussions of sanctions enforcement. The independent refiners, or teapots who traders claim are being lured by the cheaper pricing, especially as their domestic refining margins became squeezed under strict regulatory monitoring, are at the vanguard of China's buying out its competitors. Iranian oil is increasingly being used by plants since it is less expensive. Reuters was informed by a company executive in China who was involved in the independent refiners. According to traders, January Iranian cargoes were traded for $5 a barrel less than benchmark Brent. According to them, such costs were competitive with Brazil's supply, which was priced at a $7 premium over Brent, but were stable compared to late 2021. Iran's crude exports soared to over 1 million BP'd in December, according to consulting company Petrologistics, which monitors oil movements, the country's highest level in over 3 years. According to CEO Daniel Gerber, the majority of Iran's oil exports travel to China, frequently via complicated routes and transfers, with monthly little amounts going to Syria. Iran's total oil exports are estimated by Petrologistics to be at 800,000 BPD in January and 700,000 BP in February. However, Rolex, a different data analytics company, estimated that Iranian shipments were over 1 million BPD in both January and February. Chinese customs will reveal statistics for January and February and March after reporting its first formal import of Iranian oil in December. Iran is anticipated to shift sales away from the independent refiners in China if the 2015 nuclear agreement is renewed. However, it is doubtful that the Islamic Republic will cut off the water to these clients, a $20 billion income generator over the previous 2 years. Iran might not be entirely confident in the New Deal's potential longevity. China-based oil industry executive, Iran would want to maintain that route open. Chinese teapots have proven to be a crucial outlet during the darkest period. According to the Wall Street Journal, China and Saudi Arabia have been discussing yuan-based oil contracts for 6 years, but Saudi Arabia's dissatisfaction with the U.S. appears to have sped up those discussions. The Saudi leadership is becoming more and more dissatisfied with the Biden administration's efforts to reinstate the Iran nuclear deal, as well as long-standing security obligations to defend the country. In 2018, China launched oil contracts denominated in yuan. They have had some success, but not enough to challenge the dollar's hegemony. If Saudi Arabia starts conducting business in Iran, it will be bad news for the dollar. And a plus for China. China would adore reducing its reliance on the currency. It goes without saying that American authorities are not happy with this development. The concept of the Saudis selling oil to China in exchange for yuan was described as extremely speculative, aggressive, and unlikely by a senior U.S. official. Ironic considering how the U.S. has used the dollar as a weapon for decades to call the move hostile. However, this could just be idle discussion. The Saudi economy would be exposed to some dangers if oil were sold in Iran. The Saudi riyal and the dollar are linked. According to reports, Prince Mohammed's advisors have forewarned him of unanticipated economic harm. Should the nation immediately begin selling millions of oil barrels for you? However, it comes as no surprise that China and Saudi Arabia have intensified their negotiations recently. It has become clear how the dollar has been weaponized. The U.S. disconnected certain Russian banks, including the central bank, from the SWIFT payments network following Russia's invasion of Ukraine. The CCB for Worldwide Interbank Financial Telecommunication is known as SWIFT. Financial institutions can use the system to communicate and receive transaction-related information in a safe, standardized setting. The worldwide dollar system is made possible by SWIFT because the dollar is the world's reserve currency. The U.S. has a lot of influence on other nations because to its supremacy in the SWIFT and currency markets. However, the dollar's status as a reserve currency affects that leverage. That there is fallout from the U.S. using dollars as a foreign policy carrot and stick shouldn't come as a surprise to anyone. For the U.S. government, which relies on dollar demand to pay for its out-of-control expenditures, a decline in dollar demand would be terrible news. Consider a scenario in which China didn't require dollars. The largest foreign holder of US debt is China. Who will step in to fill the gap if it continues to divest itself of money? For the past 2 years, the Federal Reserve has been buying treasuries at an astronomical rate to maintain control over the bond market. The U.S. government would either need to substantially cut expenditure, or the Fed would need to keep printing money to monetize the debt if it didn't decrease purchases, and purportedly intend to reduce its balance sheet if the demand for treasury bonds fell sharply on a global scale. Even if this is only chatter, it serves to highlight how unstable the dollar is. It would be smart for American politicians to carefully contemplate potential dollar weaponization, the development and endurance of the petrodollar. China made a wise decision in pricing a new oil futures contract in yuan because it aims to replicate the stages that the US dollar took to achieve its current position of dominance in foreign exchange markets, as described by academics like Barry Eichengreen and Eric Hellinger. Early in the 20th century, the US dollar gained popularity quite quickly. At the 1944 Bretton Woods Conference, which was intended to establish the post-war financial system, the US dollar's status was solidified. A global unit of account or the U.S. currency pegged to gold were the options. The U.S. prevailed in that argument and the dollar remained linked to gold until the 1970s, when the dollar came under intense pressure due to the massive U.S. balance of payments. Deficit nations started to insist on redeeming their dollar holdings in gold. Up until Nixon dissolved the dollar gold nexus in 1971, this put pressure on the nation's gold reserve. How do you feel about the petrodollar? Let me know in the space below. I hope you now have a better understanding of China and Saudi Arabia after watching today's video. Click on these videos right now to know more about secret news nobody tells you about